Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Joseph Biondo. He's the CEO of Biondo Investment Advisors. Joseph, it's great to see you. As always, welcome back to Trade Talks.
Thanks for having me again, Jill.
You got it. And of course, opportune timing here. We have the Fed with its interest rate hike decision. And of course, we'll be discussing its policy tomorrow afternoon. What are your thoughts around that? Do you think they're going to continue to keep rates elevated?
We do. I think tomorrow, I think it's general expectation that the Fed will raise another 25 basis points. That makes sense to us. I think our take is that what they're doing seems to have started to work. Inflation's coming down, but our sense is that they're going to keep rates elevated for longer than I think maybe the market participants believe. And I think that's because their primary concern is continuing to bring inflation down.
Right. And of course, the economy and the market are two very separate things. And while the economy could be slowing for 2023, you do see the markets as improving.
Yeah, I mean, the market action really since June, but even the August lows, it's hard to argue that the market has not, from a price perspective, the S&P 500 has improved dramatically, and certainly this year has been in a positive trend. We're back above the 200-day moving average. So, it's hard to argue. They say don't fight the tape, and I think a lot of the negativity out there is doing just that, which is fighting the tape. And I think the markets are trying to tell you something here.
Yeah, I mean, the sentiment was almost unanimously negative going into 2023, but it feels as if people are starting to get mildly to modestly optimistic here.
It's hard to say. I still hear, I think the overwhelming voice of the markets seems to be negative, at least in the media and things that I read and watch on TV, et cetera. So that actually encourages me. The market has a tendency to make the majority wrong for long periods of time, and I think being overly negative is probably the wrong camp. Certainly it is that way over time, but I think right now it's time to be constructive.
So where are you finding the compelling opportunities?
And a lot of last year, what performed really well were, dividend paying stocks with reasonable valuations, slower growth, more economically sensitive type stocks, which was, interesting. But and what really underperformed last year was growth. And we think the tides are turning a little bit there. While, cyclicals certainly have been acting great, things like, financials, banks, technology starting to get better, but, energy's performed real well. But we like secular growth companies. We historically like them, over time, but valuations have gotten so much more attractive in the last year that it's, very compelling to us at this point.
Yeah, it sounds like the high quality names are going to be the ones that continue to outperform in 2023. It seems as if investors are a little bit more discerning with what they're buying.
I think they'll be more discerning about growth. I mean, in our firm, we're always focused on quality. So I'm never buying something that I don't believe is quality, just because that's, the cornerstone of our investment philosophy is to buy high quality companies run by well people, and to try to do so at attractive valuations, which right now, again, is certainly more compelling than it was a year and a half ago. So I think quality always leads. I think in the long run, quality always brings you through. And so, that's not anything new from our perspective. And certainly it helps us if, others are more discerning and looking for quality, because that's really where we're always invested.
All right. We appreciate the insight as always, Joseph. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.